Today we're going to talk about auto insurance. So let's get right into the auto insurance. So over here we got Paul's Peace of Mind Insurance. And if you watch the homeowners video, it's going to look very familiar because we're using the same mock setup. So just a little reminder, we're using a mock setup, but it's set up exactly like, a real automotive policy would be set. So also excuse my picture up here. I am blocking a little bit. I like to keep me up there so I'm here with you. But that's really the only reason. Otherwise, I could just get me out of there. But I just feel like sometimes it's just good to know that I'm right here and you're not just hearing a voice over the video. So, but if I end up blocking things, I apologize. And if I notice it, I'll boot me right out of there. But anyway, so here's your opening letter. It's a little letter. You got your policy number, your info, your insurance agency's info. Just thanking you for renewing. Paul Tester, CEO. Little notice here for Massachusetts. So I'm primary licensed in Massachusetts. I'm also licensed in Rhode Island and Florida. But obviously living in Massachusetts and primarily based there, I'm not doing a whole lot with Florida. And but the agency that I am, affiliated with, we can do business in, all the states in the United States, but primarily, I focus Massachusetts, Rhode Island, Connecticut. We've seen some stuff recently. But anyway, I won't spend all day on that. But this is just telling you state minimums, right? So state minimums are really low. You'd be surprised how many policies I see that come in at state minimums. So, with the price of cars these days, it's not unlikely to have, $25,000, $30,000, $40,000, $50,000 car. And then the medical payments these days, it's just state minimums. It's no bueno if that's all you have, because it can easily turn into a disaster, as we'll kind of get into here. But this is just some info on the policy. Let's jump right into the policy. So here we go. And I'm sure if you've had an auto policy before, you've seen something similar to this. So I'm not going to spend a ton of time explaining every little thing. But you got your insurance company, you got you, and you're insured. If you're married or whatever the situation is, both names will be here. Here's the big thing to look at: your effective dates. So everything's going to start at 12/01. Most policies go 12 months. Some might go 6 months. It all kind of depends on your policy. So, but majority. You want to try to go 12 months if you can, because that locks you into that rate for 12 months. Where if you do a 6-month policy every 6 months, it could change, depending on what the market is doing with the insurance rates and the data and the risk assessments and all that fun stuff that goes into rating. So over here, you got your agency. But also, before I get out of this completely, let's say you did switch policies. So this is where the 12/01 kind of comes into effect. Let's say in September you decided, you end up buying a home, you're going to bundle, or for whatever reason you just wanted to shop your rates around in midterm. You can do that. And what would happen is if you got a new policy, let's say September 8th, you decided, that's it. I'm going to switch. I'm going to get out of Paul's Peace of Mind. Had enough of him. And you're going to go to John's Peace of Mind Insurance Company. So September 8th, that new policy, we would start that September 8th at 12/01. And then we send a cancellation out to Paul's Peace of Mind Insurance that you're going to end September 8th at 12/01. So that's typically the number you'll see. Try to keep things nice and clean so there's never a lapse in insurance. So over here, what do we got? We got the vehicles, and you're probably used to seeing this, but we got, 2025 Subaru Crosstrek. Here's the VIN number, Auto 2. Got a 2025 Subaru Outback, and there's the VIN number there. And let's just dive into the coverages, right? And then you can kind of match up. You see Auto 1, Auto 1, Auto 2, Auto 2. So there we go. So maybe I should have made the mouse a little bigger. I think I had it bigger in the last video, but we'll go with this one. So let's break it down here. So Massachusetts, right? So it's going to be different than some other states. This one running 1 to 12 you're going to have. But primarily, the first 4 is what we want to just look at to start off, right? So some states, you may see this be A, B, C, D, kind of like your home. But Massachusetts, we're running with 1, 2, 3, 4. That's how they roll. So Section 1. So this is going to be your state minimums, right? And what's very important is this one word here, and it's limits. Limits. So that is the maximum that's going to be paid out, right? So that's very important to understand. You probably do understand it, but just in case you don't, I just wanted to point that out. So right here, your Section 1 is like your liability, okay? So that's damages that you caused to a third party. So if you get into an auto accident, the people in the other vehicle, that would be the third party, right? So this is liability, right? So this is bodily injury liability. So this would be $25,000 per person, and that's the limit that they're going to pay. Paul's peace of mind, that's the most they're going to pay. So if there's 3 people in the other car and there's a lot of bodily injury, person 1, they're going to get 25. Person 2, 25. But look over here. Per accident is 50. So the limit on the whole accident is going to be 50. So you got 3 people, and person 1 gets 25, person 2 gets 25. What does person 3 get? Well, they're SOL, right? Because there's only 50,000. That's the max. So it doesn't mean they're going to divide it up just like that, 25, 25, 0. They got their own little formulas, how they figure all that stuff out, and their own little rules. But that's just the concept, right? So, those are very low. You look up different types of injuries. I mean, you can easily be spending, $100,000 on, damages caused, broken bone or, head injuries, whatever it is, it can add up quick. So this is not a lot of coverage, right? So that's what will bring you down to like the optional bodily injury to others. So this is going to boost you up. Okay. So this is going to be your limit. Okay. This is your optional limit. So you don't get this in this. This just changes your limit to this. Okay. So I don't think you add these two together. This just kind of like replaces number 1 here. Okay. So this policy here, this is really good. This is what we really like to see with today's prices is $250,000 per person, $500,000 per accident. So it was 100, 300 for a long time. But rates have been going up. So 250, 500. But if you're at 100, 300, you're not in terrible shape. You're in decent shape. But if you're at 2550 and you don't have, sorry, I keep circling this, just I'm saying 100, 300, we're not talking about this right now. Right now we're talking about bodily injury to others, 1, and then I'm just quickly talking about 5 because that's going to bump you up. So that's what we're talking about here, the 250, per person, and then 500 per accident. So same scenario here, but now you got a much bigger window to play with. Less worry about out of pocket, right? So that's why optional, you really want to make sure that you get that bumped up, okay? So let's look over here at number 2. Number 2, or B, if you're in another state, is personal injury protection. So this is what you're always going to see. What it's going to come with, $8,000 per person. And when you go to 2, 3, now you're talking about you and your passengers. Okay. So 1, you're talking about the other people, the third party. 2, it's all about you now. Okay. Oop, sorry about that. It's all about you. So it's almost a flip on the home. So the home's a little different. When you're home, the liability would be, down here, and the rest of the stuff is you. All right, so all the stuff that's you and your passengers, let's see what you're getting here, right? So Massachusetts is a no-fault state, so they're going to have this PIP, right? Because the reason they're going to have this is because, Massachusetts wants to minimize lawsuits and different things like that, right? So PIP is going to be able to pay you and your passengers if something were to happen. You can go into your own insurance. So even if the other person caused the damage, you don't have to wait, right? You can just tap into this. and you can help with, $8,000 per person if something were to happen, right? So there is a thing called subrogation. Your insurance company is going to go after the other insurance company. But sometimes it takes time, right? Things have to be proved. They have to figure things out. So if you're looking to just, take care of things in a quicker manner, you can go right into your own insurance. So, but that's what PIP is. So that's how Massachusetts likes to set it up. Over here on 3, you got bodily injury caused by an uninsured auto, right? Uninsured. So right here, kind of self-explanatory, right? So if it's an uninsured auto, hits you, injures you and your passengers, no insurance, they're just flying down the highway, straight off the racetrack, and you guys are injured, they don't have any insurance to pay you, that's when you would use this, right? So now you're going to get $100,000 per person. So if your family's in there or your friends, this is going to come into play, right? And you got $300,000 per accident. So this you could also bump up if you wanted. You could go 250, 500 here if you wanted to. So, but that's a really important thing to have. You don't want to go with the state minimums because you can't really control what somebody else is doing on the road, right? It's hit you. So yeah, you can go after them, but if they don't have insurance, I mean, good luck, So damage to someone else's property, this is a huge one. So, the state minimum, and you can see them here, that would be 30,000. But right here is 100,000, right? So $100,000, that's typically the starting point. What I like to see when I'm looking at a policy is you want to have at least $100,000 because you hit a telephone pole. I mean, that's 75,000 right there, probably. So, and then I think I said this in one of my other videos, but let's say you crash into a business, you just freak accident, you lose control, you crash into a business, and they, lose power. Now they're losing customers, they're losing money. I mean, you can go way beyond. You can go way beyond this 100,000, right? I'm not telling you to panic and get like millions of dollars of coverage, but these are just things you want to think about, right? So 30,000, if you just get state minimum, it's not covering you properly. So 100,000 gives you some breathing room, for what things realistically cost. So let's dive down here. We already started talking about optional bodily injury to others. Ties in with number 1. But just look at this thing here, right? This is optional. So all these things are optional and totally up to you. So this policy here has no med pay. Typically, med pay is a good thing to have, and I would recommend at least 5,000 for med pay if I was reviewing this policy here. So medical payments, and we did talk about this in the homeowners. So med pay is like a flip, right? So medical payments here is going to pay you, right? So you would get 5,000, or actually people in your car could each get 5,000 because it's per person. So if you had passengers with you, that's going to pay you and your passengers. Where MedPay on homeowners is just paying other people. So you're not able to use it, but in your vehicle, you are able to use it. So it's just like a flip. So, but I'm not going to dive too much into homeowners, but just wanted to point that out because it is medical payments. You do see it on both policies. So, but this is when we start talking about like full coverage and different things like that, terms that we use as consumers. You got collision. So that's going to be, hitting another vehicle. Obviously, it makes sense, right? Collision. So this is your deductible. So, and you can see it up here. It's up here. So you have a $500 deductible with collision. Typical now, I'm seeing 1,000 a lot over here. So obviously, the lower the deductible, the higher your premium is going to be. So if you're looking to save a little money, if you take on more of the risk and you up your deductible, the insurance company is going to cut your break, right? They're going to lower your premium. So it's a give and take kind of thing. If you're somebody that doesn't file a lot of claims, it makes a lot of sense to do a little bit higher deductible because otherwise you're paying a lot every year and obviously gets a little more with the home than the auto, but you're paying more every year, when you have a lower deductible. So, but that's going to be collision. Now, one thing I really like to point out, because before I got into insurance, I didn't know this, but if you were to hit a deer or an animal, my brain says that's collision. I had a collision with a deer, ran out in front of me, but that's not how it's viewed in the insurance world. So in the insurance world, that's the one instance where you do collide with something, but because that thing was an animal and it was moving and it wasn't another driver driving it, that would actually fall under your comprehensive. So your comprehensive, you'd also see this as other than collision. So that's your comp. So that would be any damage to your vehicle. So what this stuff is doing is it's covering your vehicle. So your Subaru's up here, 1 and 2. You see we got 2 columns here. So you could change these things. If you wanted one Subaru, now these cars are both 2025s, but if you had an old, 2001 pickup truck, you can adjust the things on just the pickup truck, and you can have the better coverage on the Subaru. So you have a lot of play here. And, you see that a lot with older vehicles. They might not want to pay for these things. You might want to save your $242 or whatever it would be. Or sometimes, maybe it's not much. You're like, hey, $180 and it's going to cover comprehensive. I mean, to me, that's makes a lot of sense, especially for a 2025. So, here it's a good thing to have. You definitely want to have comp and collision. And obviously, if you have a lien or you have a loan, you have to have that stuff, right? The loan company is not going to let you just take that 2025 Subaru, drive it around town everywhere, and something happens to it, and then, you don't have a means to pay for that damage. They want to protect themselves in that situation. So they're going to require that you have comp and collision or full coverage. When they say full coverage, that's what they're talking about. You have collision and you have comp. So comp can also be called other than collision. So in Massachusetts, we do call it comprehensive, but you could hear that term other than collision. And what that means is it's other than collision. So it's all the other stuff, right? The tree branch falling, the rock falling out of the truck in front of you, or falling out of wherever, you don't know where it came from. All those little things that can happen, the theft, vandalism, all that stuff, fire, that's all comprehensive, right? So if you don't have comprehensive, you don't have coverage on your physical vehicle for that, okay? So that's the big difference here. So we're talking about injuries to other people. Here we're talking about injuries to you and your people. Here we're talking damage to someone else's property, but it's still something you're liable for. And then down here, we're talking about, your payments for your people that are injured in your vehicle. But then when you get down to collision and comprehensive, now we're talking about your actual vehicle being covered. So a lot of this other stuff is just other people's property or bodily injury stuff. When you're talking about your vehicle being protected, it's collision and it's comp, right? So those are the 2 main categories that you're looking at here, okay? And it can be a combination, right? You could have collision and cause, obviously, someone else's property. And I really should have pointed this out, which I was talking about telephone poles, but this is vehicles, other vehicles, damage to someone else's property, not comprehensive. So this is other vehicles, okay? I was talking about telephone poles, but this is other vehicles, right? So I should have pointed that out when I was just talking about that. So when you see $30,000, yeah, we're not just talking about telephone poles and going into a business. I mean, how many vehicles are on the road? Like I talked about at the beginning, 30, 40, 50, 60, $70,000, brand new pickup trucks now. If you, God forbid, something happens and, you just split second, your eyes are off the road for whatever reason, loud noise, animal runs by, whatever it is, distracts you. You can easily go over that $100,000 mark. Okay. But the good news is it's per accident, right? So go and do it again. No, don't do it again. but yeah, it'll reset after that accident. So, but let's jump back into this stuff. So, these are the deductibles like we were talking about, comp and collision. But let's get down here, right? Substitute transportation, that's going to be your rental car, right? So on your rental car, something were to happen, you get into an accident, and you need a rental because of an incident. Okay, so this isn't, hey, I'm going to Disney World and I need a rental car, need substitute transportation. No, that's not what this is. So this would be, only if there was an incident that was covered by the insurance, then you would get substitute transportation. Now, I highly recommend that because it's a big headache when that does happen and you don't have a vehicle, right? Especially if you and your spouse both work or whoever this other vehicle is, it's difficult, right? Now, if you had a third vehicle laying around, or you guys are retired and you got two vehicles, okay, maybe you don't need it, right? But if you're both working and you both need your vehicles, it's important because this might be, 50, 60, 70 bucks, 80 bucks, maybe less. I mean, I see a wide range here. Sometimes it could be more, everything rated depending on the driver and different things like that. But, usually you like to see here a good, $45 a day, 9 or $30 a day minimum, probably 900 maximum, or 45, 1200. I see all different things in here. But what that's going to get you is what size rental car you're going to get, right? So $30 a day, you might be squeezing into like a tiny little car. 45 gives you a little breathing room and get a little bit better car. So that's something I always recommend because the value is usually off the charts good. And for those of you that have never needed it, you might not think much of it, but trust me, and I've had it happen. I was without my truck for a long time because of something that happened on the highway. So, I'm glad I had this because I was covered the whole time my truck was getting fixed. And actually, my insurance company was really good because it got extended because the accident, wasn't my fault. So the other company, it was worked out, and I went beyond the 30 days, driving this thing around. But I don't know what I would have done if I didn't have substitute transportation in that situation. So towing and labor. So you can see the price here, right? $7, $8, $10, to have towing, it's really a no-brainer too. Give you up to $50 per disablement. So you might have some out-of-pocket expense, but it's going to help you greatly. The only time I might not recommend this, or actually probably don't usually recommend it, is if you have AAA, you have another roadside assistance. Yeah, even though it is only, $14 for the two vehicles, it still might not make a lot of sense because you're just going to use AAA, if you had a towing incident. So why even pay the extra 14 bucks, even though that's all it is? So let's jump over to number 12. So 12, we got bodily injury caused by an underinsured auto. So this is really important, right? So we have uninsured auto. So that's somebody not insured. What's underinsured? Well, it's just how it sounds, right? So they don't have enough insurance. They might be a state minimum person, right? They only got $50,000 for that accident, right? They cause you a ton of pain and suffering and all that stuff. I'm not going to get into what's covered as far as all that goes because there are different things that are covered, not covered. But let's just, injury. Maybe you had head trauma. Maybe you had to have a surgery. And this person only had 50 grand to give you. They don't have money in the bank. Now what, right? You could sue them, go through that whole process, right? Or you could have insurance, and you can use your insurance, for up to 300,000. So it's going to pay the difference. So you're going to get the difference between, what they don't have, up to your amount here. So that's the main part of the auto. This one here, these are pretty high premiums, right? $5,600, for this policy. So that's higher than obviously, I typically see. But, it's all about the rating. So over here you have your credit. So you got 98 and 99s. This one's got a 2. So this person has had some incidents. So what's important here is this is the SDIP number. And that's going to affect your rating. So whatever your ratings are, if you had other incidents in the past, it's going to affect your rating. So that's going to really play a key role when we jump down into the endorsements, right? Because the endorsements are huge. So probably the highlight of this video, besides understanding this stuff, is knowing what awesome endorsements are out there that you really should consider, right? So let's jump down into this. So this is going to be where your garaging is. Your garaging is going to make a big difference as far as your rate goes. And it's all based on numbers, right? Everything's calculated. Where are more claims likely to happen? Those areas that have more claims, they're going to have, higher numbers as far as the rating goes. If you have a lender, because obviously, like we were saying, you have to have comp and collision. You have to have the full coverage if you have a lender. So, and I just had a little fun with these with Florida. Hey, maybe the lender is there. You see a lot of offices out of state, but all right. So here we go. We got different endorsements that are part of this policy. So these are all the different endorsements that are part of the policy. Come down here, you got multi-car. Here's some of your discounts. Here's your drivers and your license numbers and the birthdays and all this fun stuff, right? So let's get into this. This is just going to tell you some of the stuff. Like I said, every policy is going to look a little different. So I'm not going to totally dive into all this, but there's, some discounts you could get, miles that you're driving, different things like that. All that stuff. So this just gives you a little bit more on your info here as far as, the garaging. This is there's not a whole lot you really need to know with this. This is just, your annual mileage and stuff like that. It's helping them rating and it's showing you the thing. So, but here's where we get into some cool stuff, right? Let me look at me so I'm not blocking stuff. So you got waiver of deductible. Okay, so waiver of deductible. If you can get that, sign yourself up for that one. So what that is exactly what it says here, right? That auto was legally parked when struck by another auto owned by an identified person, right? So as long as that person is identified, you're going to get your waiver of deductible, right? That auto was struck in the rear by another auto moving in the same direction owned by an identified person, right? And then over here, the operator of the other auto was convicted of any of the following violations. They are operating under the influence, driving the wrong way on a one-way street, operating at an excessive rate of speed, or any similar violation or any similar law of another state in which the accident occurs. So they're going to waive the deductible in these situations, right? For Part 7. So you got to follow these things. Part 7 is your collision. Part 7. So in those situations, you normally have a $500 deductible, but you'd have the waiver, right? So if you have a waiver deductible, that's a good thing to have, right? So what are they not going to pay? Right here, right? We will not pay if the operator of the auto covered under this part was also convicted of one of the same violations. So if you were convicted of the same stuff, you're going to have to pay the deductible. And this just gets into some court stuff. So, all right, here we go. $100 glass deductible. So a lot of times we like to do zero glass deductible, if we can get that on there. This one here is $100 glass deductible, so that just means it was comprehensive. I don't want to keep scrolling up, but you remember you had a $500 deductible, and if it was glass, because glass is one of the the highest claims for an auto, number of claims, that's why you like to see a lower deductible there because you don't want to pay $500, every time you get a little chip on your window, right? So here it would be $100. Or ideally, you want to try to have zero deductible if you can get it. So, all right. I'm not going to go through all these because I just want to hit the highlights. So here's the big one, right? Accident forgiveness, right? So accident forgiveness. So what is this, right? So this one is huge, right? Like we were looking at the steps, 99, 98. The person was a 2. The Massachusetts Merit Rating Board. They decide all these things, how much an incident is, and you can find all these things out, like what, at fault, if it's a major accident versus a minor, and how many steps you go up and all that. I'm not going to dive into all that right now, but these stay on your record for a while. So you want to make sure You know, you want to try not to have any accidents because it really, I see the premiums go really high with just one. So that's where this comes into play. Accident forgiveness. So just like it sounds, they're going to forgive you for your accident, right? So one at-fault accident caused by an eligible operator, you're going to be, you know, it's not going to be rated against you. So that's a huge thing to have. And anytime you can get that, you definitely want to get that because, um, you know, those situations could happen. You know, everyone could be a really good driver, but you just have that one freak time where something happens. But here's what I want to show. Sorry, that's why I'm scrolling up aimlessly here. But as I went through with the homeowner, so you got this 12 AP 1678 accident forgiveness. So that's the name of that endorsement form. If you go up here, accident forgiveness 12 AP 1678. So all these numbers you see there, she's like, what the heck is this? What is this AP 1681? You can just go down here and you can just look for, you know, AP 1681. Well, here's 1680. We'll keep going. Yeah, we found 1681. All right, what was that? All right, so we have this auto loan lease gap endorsement. And this one, my friends, I will highly, 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 highly recommend. You know, sometimes you can get it at the dealership. Sometimes the cost is, you know, better on your insurance. So it's definitely things you want to look into. But I'll just tell you a really quick story because my poor brother happened to him, right? So he had his auto. He had a loan on it. You know, at the time, he just, the way the rates were and different things, he just had he owed a lot more on the vehicle than what, you know, than what it was worth. So somebody hit him, totaled his car. He did nothing wrong. He's just driving. Somebody hit him, totaled his car. When they crunch all the numbers, what he owed was significantly more than what the car was worth. So in that situation, you know, he's going to be in a lot of trouble, right? He's going to owe money because he's going to owe the difference. So if you have this, it wipes away the gap. So that's the gap between what you owe, what the car's worth, and the total loss. They're going to take care of that for you. So thank God, you know, nothing crazy happened with them with the accident. But, you know, money-wise, you know, I learned the lesson. And in a selfish way, it's always great to learn lessons from somebody else that you don't have to go through it. Feel really bad. I felt really bad for him. You know, it stunk, but I learned, right? And you know, so I've always gotten gap all the time, ever since then, right? So just learn from what happens to other people. You know, freaky things happen. So, but that's what that one is. But let's go up. We skipped 1680 over here. What was 1680? 1680 is, drum roll, oh, Paul's customer care package endorsement. Okay, so this is going to have a few different things. You know, this, and not every policy. So let me just backtrack a little. So these endorsements are not on every policy, right? So these are just things that you specifically would add to a policy, right? So an endorsement is added on. So you have your main policy that we talked about, and then these, you know, that 1 through 12, that's your main. All this other stuff is extra. So you either have the stuff or you don't, right? This is your main policy up here. As far as coverages go, you know, not in language spelled out for you, but there we go. All right, so let's go back down here. But yeah, sometimes what carriers will do is they're going to package all these things together that are, you know, really valuable, right? And they're going to put all this stuff together, Paul's customer care package, and they're going to put it all in one thing. So you get all these extra things, you know, in a bundle. So, you know, save some money. You know, insurance companies, they love their bundles. So, new vehicle replacement costs. So, I'm not going to get into all these because everyone's different. But what's cool about that is your car could be older, but they're going to give you what a new vehicle would cost because almost every auto policy is going to be actual cash value. So actual cash value versus replacement cost. Actual cash value is with depreciation. Everyone's heard the term. So you drive the car off the lot, it goes way down in price because it depreciated, right? So that's actual cash value. So if you can ever get a replacement cost coverage, that's something you might want to consider because then they're going to replace your vehicle with the new vehicle's cost. So, you have to, there's very high stipulations with that. Like, look, your auto had less than 500 when you bought it. It's within 365 days. Like, so there's a lot of things that got to fall into play. But hey, there's right where I work, there was a customer that literally drove it off the lot, just like they say, and got into an accident. So it lost thousands of dollars as it pulls off the lot. So you want to make sure you have something like this because that can happen. It's terrible timing. You might not think it's going to happen to you, and then one day maybe it does, and then you wish you had some of this stuff. So replacement cost is huge on vehicles. Let's look at any of this. So enhanced towing, that would just give you a little bit more, trip interruption coverage, rental vehicle, loss of income coverage. So if you just have loss of income. So all these cool things that they have, death benefit if you're wearing the seatbelt properly, well, let's not think too bad stuff with that. All right, we talked about that. And this is just telling you your mandatory endorsements. So you have to have 25,000 to 50. It used to be 2040, but they bumped it up. And then damn, somebody else is like we were talking about, it's 30,000 optional. You can increase and different things like that. So let's just talk about auto real quick. A couple of things that I haven't talked about. One thing that's not on here is disappearing deductible. So that's not on this policy, but disappearing deductible is a really cool one to have also. Because with disappearing deductible, if you're a good driver and you stay with Paul's Peace of Mind Insurance, for 5 years, you're going to get some benefits, right? So what it usually does is it'll drop off $100. Let's go up here just to have a visual. So you have a $500 deductible. And what it's going to do is it's going to drop off, every year that you're a good driver, you don't have an incident. The next year it's going to go to $400 deductible. And then the next year it'll go down to $300 deductible. And then the next year, a $200 deductible. Usually there's a maximum of 5 years. So you'll get, if you're a good driver, 5 years, eventually you'll go down to, zero deductible. So that's always a neat one to add if it's an option. And a lot of times, value-wise for what it costs, it's usually a no-brainer to throw it on there if it can be thrown on there. All right, so what do we got? All right, so what if someone else is driving your vehicle? Right? So these are some of the things, a lot of questions that I get. I'm just going to take a few minutes. Let's just kind of dive through some of these weird scenarios, right? So what happens if you let somebody borrow your vehicle and then they get into an accident? Then what happens, right? Well, whose insurance? Like, what's going on? So your insurance will cover your vehicle, right? It's going to follow your vehicle. So if you let your neighbor Dave borrow your truck because he's going to go to Home Depot and pick up some stuff, he doesn't have a truck, you let him borrow yours, he gets into an accident, your insurance is going to cover your vehicle. Okay? So where that makes a difference is you let him use your vehicle, right? So if you didn't let him use your vehicle, that's a whole different story, right? So if you give permission, then it's going to be your insurance that's going to cover it, right? So that's important to notate. Also, all right, here's where it gets a little sticky also, and that's when you live with people, right? So that's why when you're getting your insurance quote, they're going to ask you a lot of questions, right? Insurance company wants to know who lives in the house, all the household members. They're all going to show up, when the RMV report is pulled. If people have, their name and stuff and an address registered at your home. So you got to make sure that you're honest and truthful and you say everyone that lives there. And It's just they have easy access to the vehicles, so that's what makes it a little risky for the insurance company, right? So that's why they typically want all the household members to be listed, um, on drivers as drivers on those vehicles. But if they don't drive the vehicle at all, that's okay if they have their own policy. So, looking here, let's say there was a third person, little Johnny Tester, right? He just got his license. He's the son, and he has his own vehicle and his own insurance, and you could exclude him because he has his own vehicle and his own policy. So, that shows to the insurance that, he's less likely to drive these vehicles. So they would be okay with that. So where it becomes sticky, like I was just saying, is if list them or, you don't list them and then you say he doesn't drive the vehicles and then you get something happens with one of these vehicles and he's driving. When it comes to this stuff and paying the claim, you might run into a sticky situation because he wasn't listed. They didn't take that risk into factor when they gave you your policy. So in essence, it's kind of like your policy was based on invalid information. So they might have a reason not to pay the claim because they were charging you a premium based on the risks that they assessed. But they're not the true risks that were associated with the property. Or they could be a deferred driver, when they have their own policy also. Excluded versus deferred, very similar terms. Just an easy way to think about it is deferred driver, because they have their own policy in their own vehicle. They could, potentially use your vehicle. It's okay if they're deferred, but they won't be rated against you because they have their own. Excluded, they cannot drive your vehicle. And insurance companies are very wary to have excluded drivers that are in the household. They may require them to be rated. They're going to require you to have waivers signed that they're not going to drive the vehicle, because if they did drive that vehicle, they're not going to cover, the excluded driver. So, and the other question I do get asked also is when you're looking at 1 to 4, especially with comparing to home, there is section C, that's personal property, right? So where's personal property on here? Right? Is that covered at all? The answer is it depends a little bit, right? So that would be part of your comprehensive in a sense. So when I said theft earlier, obviously I'm talking about theft of, the vehicle itself, but also theft of certain components. So where does the line get drawn by the insurance company? And if you want to look at it simply, don't say this exact, but if you just want a general rule of thumb, if it's like installed in the vehicle, so it's like the radio, something in the dash, something's installed, it's like a permanent part of the vehicle, that would be part of your theft. Whereas if you just had like, your laptop sitting in the back, you had your gym clothes, whatever it was, those personal properties would not be covered. So that's where you would want to have, your homeowner's policy, or if you're renting, that's where you'd want to have your renter's policy come in, because that's where they're going to pick up in your vehicle, your personal stuff, because on renters or your condo, whatever it is, you're going to have, personal property. So that is not part of auto. So I always like to make sure that people understand that, because that is a common question that does come up. All right. And another question that I get asked a lot is PIP versus MedPay. And, well, if I have MedPay at $8,000, why do I need any medical payments? And then the answer just kind of lies here. It's optional stuff, right? So you're adding med payments in. PIP actually has a little bit more of an extended coverage. So it's going to cover things like, lost wages, different things like that. Med payments is a little bit more narrower, but it's going to give you extended coverage here, with, helping with medical costs, like deductibles, different things like that. 8,000 can dry up pretty quick. But if you have, a $5,000 or a $10,000 cushion here, it's going to go a long way. So, I could keep going and going with auto, But in essence, that's an auto policy. These are the different areas. This is what you're getting. And, if you have any questions, feel free to reach out to me. You want me to look at your auto policy, I'm more than happy to do that. If you're in one of the states that I work in, if you're out in Kansas, then, heck, I never saw a Kansas auto policy. I'll take a look at it. You can send it over. So other than that, have a great day. Let's go back to me. So thank you for watching, like always, and I'll catch you in the next video. Going to be doing a few more like this. All right. Thanks. Have a good day. Bye.